This is part one in my interview with Matthew Timpane, Option Circle's resident strategy builder. In it, we explore some of his experience and how it has framed his thoughts on building trading strategies. In part two and three, Matthew will show us what is possible with the Option Circle tools, the types of strategies that can be built, and specifically, how easy it is to become a builder. Well, the first question I really want to get into is how did, when you started trading, were you thinking about automated trading at the start, or like quantitative trading, or was it directional trading? Talk to me a little bit about where was the beginning?
Yeah, no, I came from like a value orientated shop to begin with. But one of the things that I always found was, when I was just low on the totem pole, was we're catching, and getting ourselves caught into value traps. So one of the things that I wanted to do always was overlay another strategy so that we really didn't get caught in those value traps, at least as often. So I started, discretionary trading like anybody else, watching charts, placing trades manually. But over time, I really kind of realized that the emotions kind of sabotaged, good setups, right?
Yeah,
So that led me to explore systems. And that appeal in automation was in this objectivity, really. It's because it's a rules-based execution,
right.
and it brings consistency, and you have this ability then to scale across multiple markets, really without fatigue. And you can't have that many eyes and that many hands available. So it really kind of helps in that aspect. So that's why it really piqued my interest.
Usually when people think about automation, they think about technical analysis, right? I can see the chart. If it crosses this, does that, I'm in.
Yep.
Value investing is what it is, right? It's fundamental, looking at fundamental investing. So can you do automation with value investing?
Absolutely. I mean, the one thing is, being a CMT, I kind of, we were kind of the original people that were trying to do quantitative work, right? Through trends and things like that. Um, but, you can overlay that onto value. I mean, value has trends, value has levels that are defined, so there's no real difference there. So, the one thing we were able to do with that value fund was we were able to get away from getting caught in so many value traps, right? Like, so we were able to establish good risk parameters and get in and out of those positions a lot more easily, and be able to turn around the fund because the fund wasn't doing that well when I showed up. So absolutely, you can do it on value, you can do it on momentum. It doesn't really matter. It all works the same, and value will have its momentum times as well. So.
Right, right. Okay, so value investor to do you sometimes do momentum? You jump in there on the momentum side? There's a big change. All of a sudden, a big shift. And I'm guessing that prop trade trading, which you've done, lends more towards the momentum driven go, go, go. Where can I make money right now?
Exactly. So even though we eventually sold that firm, and some of the strategies were still momentum driven through like ETFs and things like that. But yeah, I mean, I left and I wanted to follow my passion, which was more momentum driven trading, right? I kind of found that in working with the fund, right? So prop trading kind of really taught me the value of risk adjusted returns, the importance of defining that edge. You can't just be right, you have to really be repeatable. And that mindset, is translated directly into the automation. Every strategy needs to be well defined, have a well-defined thesis, really. And, we do some rigorous back testing and have a clear risk framework, right? So prop desks really kind of instill that discipline naturally to all their traders, which automation now enforces by default.
Gotcha. Now, the beauty about automation, for what I see, is that it really focuses on the strategy, right? It focuses on the process. Not any one particular trade, whether it wins or loses, is going to make the strategy work. It's really about this process that you develop.
Yep.
And does that take experience? Meaning, how much experience do you have to be a fundamental value investor to sort of trade automated value stocks?
I don't think so at all. I think you can develop a system, if it's catching, say options flow and it's hitting certain technical parameters. It doesn't matter if it's a value stock or a momentum stock. If you've developed the system the right way, you don't know exactly what the outcomes are going to be, but if you know how the system is going to work, you want that in there, right? It provides diversification, so you're not just playing the NVIDIAs, the Teslas.
Right.
At times you're going to see, the CVXs and the XOMs, in the energy
Right.
sector. They're going to have their moment in their day. And some of them actually work really well based on technical parameters and options flow. So it's definitely not something you don't need to root that out necessarily from your models. You definitely can if you want to have a certain theme focus, but there's no reason that you have to actually root that out. And like I said, it
Right. You
provides
don't
you.
have to be a value investor to actually use value
No.
investing in automation, which is actually a good thing. You're now everyone's able to enter into different styles of trading with automation now because again it becomes more about the strategy and the thought and value investing. You mentioned you see unusual options activity in a value investing
Yep.
name. That actually could be a pretty good signal. And now you can actually
Exactly.
back test value names who are experiencing some of that UOA in the market. I myself I'm personally just starting to learn how to build these automated tools. And at Option Circle, they've made it easy for me because I can just plug and play. But I find myself still thinking it's not as easy as just going there and plug and play. It's like you have to take about a little bit of time before even starting to think about this potential strategy or this process, and then find the tool that's going to get you the answer. So how long did that take you to learn? How do you do it now? And what's the beginning of a strategy look like for you before even the tools start? How do you think about it?
Yeah, so I mean, you really kind of want to look at it from like a multiple time frame perspective, maybe even, or really kind of back testing strategies over multiple market regimes, and then forward testing it in maybe a paper account, and then really kind of when you do go live, do a small scale live deployment. At each stage, you're really kind of just looking to see if that edge that your framework, your thesis persists and that you have acceptable drawdowns and there's really no signs of overfitting, right? Like the one thing about
What does
overfitting
that
is
mean? Yeah, what does that mean overfitting?
overfitting is to basically to make your P&L curve, at least this is how I look at it. Make your P&L curve, you're trying to perfect past market data, and that's not going to happen in the future, right? Markets are sloppy at times, markets are different. You might be in a momentum regime market again, and that old, system that you thought that you overfitted that you wanted to have that was showed astronomical numbers maybe on paper, right? Because you're backtesting from past data, it's not going to necessarily perform the same because there's going to be different market leaders. There's going to be different types of stocks that are going to be moving in that market, or different, assets even like, so you might have, right now we have, where you're seeing, stocks not that long ago were going down with yields, right? So like if you were having a model that would have, that had bonds, directly, inversely correlated to stocks. Well, that didn't go very well, not that long ago when they actually were highly correlated. So you don't want to overfit your systems, and that's one of the things. Uh, I think that you kind of just you got to keep it simple in a weird way, right? Like you got to have some complexity, but you got to also keep the system simple.
Focus on the strategy, keep it simple, don't overfit,
Yes,
and interesting back test, but also future test, right? Play the
e-
game a little bit in a virtual account, if you will, and
exactly.
try to find, try to figure out if it's doing what you expect it to do.
Exactly. And that's the one thing about Option Circle. We do have forward testing. You can throw it into a paper account. You can see how it's going. Run it for 2, 3 weeks if you want. Whatever your time frame is before you want to go live, and then you can do it on a smaller scale
Yeah.
into a live account.
And it's very
Because
exciting. They're going to have some back testing too pretty soon. So you'll
yes,
be able to
yeah,
do
and the
both.
back testing is going to be huge.
Yeah, it's be fantastic. So okay, so you have this thought. You jump on Option Circle, and there's a number of strategies already there. So you can actually take one of the strategies and clone it and then change little things. So how many attributes or factors do you think each strategy should have? You said keep it simple, but how simple is simple?
Yeah, so if you're developing a strategy, I mean, really, I think, for at least a beginner, right? You can either look at it from like a one agent type of perspective strategy. Like if you're just really want to be in Tesla, we know that back tested data on Tesla over like a MACD on a daily time frame actually performs really well over time. It's not going to work every time, not every trade, but over time, it's going to work really well. And so you could put something like that in there, and then something else. Like I was just actually looking at Tesla today, and the 30-minute time frame MACD on Tesla. So if you wanted to, is a good hedging strategy for like a crossover, right? So you could do that, or you could use a moving average or something like that, right? And then you can add this hedging strategy onto that so that it maybe, hey, when that time turns, you got that hedge on there, you're going to protect those gains, and then you're eventually going to hopefully get out of positive gain on your longer term strategy and your shorter term strategy. And then maybe the bot kind of or the algorithm or whatever you want to call it, the strategy kind of dies out temporarily until the next signal comes.
Nice. And do you one of the things you hear is that every strategy doesn't work all the time,
You know.
right? And I guess the question then becomes, is there a way to figure out what regime you're in and then sort of apply the next best strategy to that new regime? So for example, in Tesla, you're playing it, say it's the 30 days this month, and then all of a sudden you're seeing that it's not working. It should be working 60, 70% of the time, and all of a sudden that rate drops to 30%. Is it just an anomaly, or is there a regime change where something is no longer working and you have another one that's on a 10-minute time frame or a 5 minute, and you can you test them out, or do you test them out? Is that a process that people do, or
Yeah, you can test them out. One thing like so MACD or moving average kind of crossovers, things like that are great for like dip buying or looking for trend change and momentum, right? And obviously, we know that at times stocks will go sideways, right? So, say you do have like that MACD or that moving average type of, strategy running, but you see all of a sudden, a convergence of moving averages. You start seeing that 10-day, 20-day, 50-day, hey, even 100-day, maybe even 200-day, and the stock's going sideways, you really want to shut that strategy down, that's momentum, because you're just going to get chopped up, right? You're going to constantly get entries and you're going to constantly get exits as
interesting?
it's kind of going through a choppy market environment. Maybe at that point, having secondary, strategy that you can implement if you're really like a huge Tesla fan, you want to be able to get the action. You could probably overlay like an iron condor strategy temporarily, and then you could also maybe add another agent in there for a breakout, right? So whether it breaks out to the upside or downside, looking at like, whatever it's a 3 month, 6 month type of high that it takes out, that it goes long on that, right? So then that way you have some long exposure on your final, say, Iron Condor, that's going to, obviously be a loser as well. So you've collected premium during that time period, but then once you get that kind of loss and it blows through those strikes, you're going to have this signal on another agent that's going to let you go long Tesla on that breakout.
Interesting. So what I'm hearing is you can have several different strategies lined up to take advantage of sort of the regime, if you will, that you're in. And
Yep.
I mean, it's interesting because I was thinking something very similar. I tend to use a strategy that is more buying options, and the times that hurt are a lot of times when we do go sideways because you're spending money generally in premiums and a buying strategy, buying option strategy, and so no movement is not a good thing. And I was thinking in the background, I should sort of have a strategy at that point, or maybe even throughout the process of me using a buying strategy to have a short straddle strategy on the S&P or something that's outside of what I'm doing that could collect some premium if we happen to be in this tight frame. Is that something that's valid? Is that good thinking or is it
Yeah, no, exactly. It's actually great thinking. I know leap buyers that what they do is they'll buy leaps, but then, over a course of a year or the, year and 6 months or however long this leap is, there's going to be periods of time where the stock goes sideways, right?
Right.
So during those times, they'll start, collecting premium through iron condor strategies. And what they'll do at the end of that is, when it finally busts through and breaks that iron condor strategy of collecting all that premium, they'll actually just, release the sold side, and then the side that didn't bust, they'll just close out of that, and they'll keep that long call on top of their leap, right, to capture that upside, and then they're back in that leap position. So whenever that expires or whenever they close out of that final long call, so that's definitely like a system you could automate, through Option Circle as well. And that's why I was kind of brought up that previous kind of, strategy that I said, like, hey, you could do an iron condor strategy, and then you could have like this breakout agent that runs with it, that captures upside.
Interesting. Why don't you take can you take 10 minutes and walk us through one of the strategies that you built? Anyone you choose, maybe has one or two agents. Make it simple, making it an easy one so that we could just see how the system, the plug and play type of system works. And you just walk us through it. This is what I'm thinking. This is why this bot would fit my strategy and show us a step by step on this node documentation that we have.
Yeah, I could definitely do that.